Welcome to another S&P 500 Trade Watch analysis. Today is September 11, 2022. Next Tuesday, the latest CPI number will be released before the market open. Then the following day, the PPI numbers will be released. The consensus for these numbers will be down slightly, but regardless, the Fed has already telegraphed to the market not to look for any pivot soon. It is committed to bring inflation back down to 2%, and it will not prematurely loosen like back in the 80s and cause more damage and difficulty to eliminate the inflation expectation behavior. So look for the market to continue on its course until major event occurs to change the market participant sentiment. And in this video, we'll analyze the S&P 500 ETF, the SPY, the Nasdaq 100 ETF QQQ, and the Russell 2000 ETF IWM, and a couple of the FANG stock, Apple and Tesla, and prepare some scenario for the coming week. So stay tuned. And here are the CPI numbers, the consensus or the expectation. As you can see, month to month, it is expected to go down by 0.1% compared to the previous month of 0%. The range is minus 0.3 to plus 0.2. The year-to-year, year-over-year is 8%, so it's expected to come down about 0.5% from the previous month. And excluding food and energy on a month-to-month is 0.3%, so it's unchanged from previous month. And exclude energy or year-over-year, exclude food and energy is 6.1, so it's up slightly, up 0.2% compared to the previous 5.9. And here are the PPI numbers, and the consensus is to see it go down by 0.1%. compared to the previous month of minus 0.5%. And the year-over-year is expected to be around 8.7%, and that's coming down tremendously as you compare to the previous month of 9.8%. And also ex-food and energy month-over-month is expected to go up just slightly, from previous month, going up 0.3% compared to the previous 0.2%. And year-over-year is coming down a little bit at 7% versus previous report 7.6%. Now, just a reminder, be sure to post your question you might have for me in the comment section. And I have, after I have compiled enough questions, I will do a Q&A video to answer them. If you are interested in reading additional content from me, go visit my Substack page. The link is smtraderCA.substack.com. I have also placed the link in the description below. And if you have not subscribed to this channel, click the subscribe and the notification icon, and be sure to click the thumbs up to give it a like to help promote this video on YouTube. Now, before we analyze the ETF and map out some possible scenario, let's just kind of quickly review what happened last week. As you can see on the SPY, it closed above the upper range of the weekly expected move, and it bounced off the trend line here, this supporting trend line. Similarly, for the QQQ, it also closed above the expected range, the upper range of the expected move. So did the IWM. It closed above the upper range of the weekly expected move. Now let's take a look at the price action and see what we could come up with for next week as some possible scenario. Notice that I am switching to a different platform this week here. I'm trying out this trading view, and also want to illustrate a little bit more on how I use the fixed range volume profile. And by the way, if you guys are interested in using this tool is free on TradingView, so you do not have to subscribe to TradingView to use this this tool here, this fixed range volume profile, and it is right under here. Okay, and select this. Do not use the indicator version of the volume profile because that will actually do not do what we want it to do. So, so matter of fact, if you are subscribing to the TradingView and have volume profile features on it, do not use that fixed range on the indicator. Use on it as a drawing tool. Otherwise, then every chart will have that fixed range volume profile at the same location. Now, what I did is I basically went and do a composite volume profile from the pandemic low. Okay, that's back in March of 2020 to the present. And I want to see where are those low volume zone and high volume zone are, because those are the interest level for us to map out potential support and resistance. Okay, so you can see that I'm using first I'm using the weekly range, okay, and basically just map this out and identify some major high volume zone and low volume zone. So you can see here I have this low volume, and here's a high volume, low volume, high volume, high volume, and low volume. The auction process have a tendency of going from a low volume to a high volume. So basically, it's what we call the balance imbalance, and the high volume price or the high volume zone is where the price is most attractive, because that's where it has most traded volume. Okay, so that act as a magnet, and I like to use those high volume zone as target area. Don't want to initiate trade at those locations because it has a tendency of chop around there, because there's a high level acceptance. So you got buyer and seller willing to trade at those levels. So you get a lot of chop. So you do not want to initiate trade there. But for the low volume area, when price get down to those low volume zone, it doesn't have that much of acceptance. So either the price get rejected or it get an impulsive move to that zone, because there's not much acceptance, not much trading occurs. Those are the location that I would be interested in looking for possible entries. So that's how I use the composite volume profile to identify these zones. Okay, so what I did is I pre-identified these zones already for the SPY. After I do this on a weekly basis, I drill down on a daily time frame, then you get a little bit more granular view on the price action. So you can see last week the price came down to this high volume node here, this high volume zone, and chop around and then move away. It move away and come back up to this low volume area. So for the coming week, here's the range for the weekly expected move. So the upper range for the coming week is around 417 to 416.30. All right, that's what I got here for the upper range of next week expected move. And on the lower range of the weekly expected move is somewhere between 396.90 to 393. Okay, so here's what I'm looking at for the coming week. Right now, it's coming up to this low volume zone here. So either it will have a continued impulsive move and move up to this high volume area. So if it have an impulsive move, continue to push up to a high volume area, then we'll look for this upper range to get tagged and see price to come up to this high volume node. And then we will see, would it get a rejection back down after the exhaustion of the buyers up here, then pushes back down, or would it continue to move to the next high volume zone, or it could just stay there and chop around for a while. Now, on the downside, if we get rejected from this low volume zone, then we expect it to come down to this high volume zone, and that will most likely come down and tag the lower range of the expected move, and also test this supporting trend line. So that is next week, the upside and downside scenario. And here's the QQQ. As you can see on the QQQ, we also have put in this composite volume profile here. And here are some of the high volume zone, low volume area. The low volume is in the blue color, and the high volume is in the a little bit of a pinkish color. So you can see last week it kind of bounced off from this high volume zone and into this this high volume area, because I basically only mark up the high volume node, or the zone near the high volume node. but you could see this is an entire balance area here, sandwiched by two little bit of a low volume ledgers, we call it. Zoom that in on a daily price level. So for the coming week, the upper range of the weekly expected move is between 318 and 316.40, and the lower range is between 297.80 to 294.50. So you can see that last week it booked this trend line, came down, and found acceptance here at this high volume zone, and it got rejected from this high volume node here. Okay, so if it get rejected on a high volume node, then the possibility or the probability is that it will go and find the next high volume node, and that's why this high volume zone you have a good high probability of getting tagged. So as it just have an impulsive move to this this low volume zone here last week, and it's making its way up toward this high volume node. So next week, if this impulsive move continue to move up, then we will expect this zone here to get tagged, and also this upper range of the weekly expected move. Now, if it reverses back down, then we see a little bit of a chop here, and then possibly get rejection again and pushes up. Because normally, once it come into this high volume area, it doesn't reverse unless there is a high volume node and basically get rejected. It's like the POC, get rejected hard by the POC, then it will pushes it away and dip below the value area low. Unless we see a high node, high volume node get built here, then we could possibly see a rejection back down. But if the impulsive move continue to move up, then we'd be looking at these prices up here for potential target. And if it does come down, then look for this lower range of the expected move to get tested and possibly get a rejection back up. But if it falls through, then look for this high volume node get tagged. And here's IWM. As you can see, we have a few prominent high volume node here. One is up here somewhere around 221.75, and one is up here near this 199. So these are a little what I call a minor type of a high volume node. And let's go and take a look at the daily time frame. And the upper range for the coming week, the expected move is between 193.50 and 192.70, and the lower range is the between 182.10 and 180.30. So as you can see from last week, we saw the price came down to this high volume node and got a nice bounce off of it. So now we expect it to see it come up to try to find this high volume node. Probably will likely see a continuation of this impulsive move to this low volume area, and see would it continue to move to this high volume node into this low volume zone up here near the weekly upper range. But if it get rejected down, away from this high volume node, then look for a move back down to this area here near this 177, and that would look for first is targeting this lower range of the expected move. Okay. Now, if the price reverses back down and just get rejected from this low volume zone, then once again we basically are looking for the price to come down to this high volume node here somewhere around 177, and first targeting this lower range of the expected move for the coming week. And here is Apple. Notice Apple 4 weeks ago, we got this little bit of a Greystone doji here. And then it pulled back from this level up at the 175 area. And now, last week we saw a little bit of a hammer doji coming, bouncing off this low volume zone. So we switch over to the daily time frame to get a closer look. You can see the upper range for the coming week is between 163 and 162.20, and the lower range is 152.50 and 151. So like I said earlier, we saw this bounce off from this low volume zone here, and getting a little bit of an impulsive move coming up. So we'll be watching this 160, this high volume zone to get tagged and possibly move up to this upper range of the weekly expected move. And if it reverse back down and get rejected from this low volume zone, then we most likely will see Apple come into this high volume zone between 150 and 147, and most likely we'll see price coming to this lower range between 152 and 50 and 151 for the coming week. And here is Tesla. Look at Tesla here in this high volume node, this high volume zone, or the balance area. You see how it came down and chopped around here. Spent a lot of time, a lot of touches in this area here, this high volume node, and down here somewhere around 230, level here. Now last week it came in, kind of dip below, coming back down into this this little bit of a low volume area here, and got a nice bounce off and coming back up to this high volume area. So let's go and take a look at the daily time frame. And first of all, the upper range for Tesla next week is 316.70 to 313.40, and the lower range is 286 to 281.70. So you can see that the price came to this low volume, or a little bit of a high volume in between low and high volume, and went to and came up above this high volume node. And right now it appears that it is trying to get up for this upper range between 316 and 313. So look for the price to try to come up to this low volume zone here and see would it get a rejection and get a push back down to this 280 area, or would it get an impulsive move and continue to move to and come up to this 340 level, this high volume node. So that's the upside scenario to watch. But for the downside is to see it will come back down here and chop around at this high volume node and get a rejection back up, or will it fall through and come down to this low volume node at 260. So those are the price scenario for the SPY, QQQ, IWM, Apple, and Tesla for the coming week. Be sure to smash that thumbs up to help me promote this video. Thank you for watching and stay safe.